Fed's next move front and center as investors brace for a week of pivotal economic data. Joining us on set for his take is Neil Dutta, partner and head of economic research at Renaissance Macro Research. So, Neil, they said it. Tom Lee saying the Fed needs to be less data dependent. Jeremy Siegel thinks the market knows better and should be listened to. But he did backtrack on those comments slightly later. But, I mean, where do you stand on where the economy is? What is demanding of the Fed right now?
I think the Fed needs to get on with cutting interest rates. I think they should do a large upfront move. If you look at their economic projections for 2025, Mike, they have the unemployment rate at 4.2%, and they have core inflation at 2.3%, and then they have the Fed funds rate at 4.1%. We're at 4.3% unemployment. Core inflation's been doing that at 2.3 for the last 3 months. And the Fed funds rate's at 5.5%. So I think it's sort of like which of these is not like the other. And you were saying this in advance of some of the July data. I wanted to also make clear. So you're not saying because of what happened in markets over a few days? No, I think the markets are a sideshow. I mean, why did the market sell off in the first place? I know people want to talk about the yen carry trade, but the big sell-off in the markets happened in the 2 days after the Fed met, because the data was really weak. And we have a lot of data coming out next week. And if that's weak, I would anticipate, some pressure.
Do you agree with what Professor Siegel is saying? Conceptually, the Fed needs to start making forecasts? Because there's a long line of people who would say, OK, maybe forecasts might be superior to data dependent, but how good are the Fed's forecasts? Not a great track record. No, I agree with that. I mean, I think this isn't about forecasting. This is about just adjusting the policy rate to what we've already seen happen. The unemployment rate is up. It's been rising for 5 of the last 6 months, and core inflation's been coming in below expected for the last 2 months. And what's the Fed doing? Oh, we have time. We can wait. We just need a little bit more data. I mean, to me, it's a little bit ridiculous. So I do think they're kind of like holding on to this higher for longer a bit past the expiration date. The counter to that, as you know, is, well, the unemployment rate is up because labor supply is up. The layoffs are not that worrisome. And so there's sort of a cushion, maybe structurally, tightness in the labor market. You know what I'm getting at. Yeah, even people say, hey, construction employment is actually up, and that's always been a better recession. Immigration has resumed is another thing that you hear. I think it's sort of like a little bit too much like PhD think. I mean, I look at the unemployment rate historically. It's a line that's either going up or down. It doesn't move sideways. If it's moving sideways for an extended period of time, it's because usually the Fed does something. Right. So and then if you think about the outlook, like what about the outlook gives anybody confidence that the unemployment rate will just stabilize here on its own? I mean, housing is slowing. If you look at new home sales that haven't been started, that's down over 35% against last year. That's going to weigh on construction. You're not going to get the kind of inventory investment boom that you saw in Q2. And incomes are slowing, which is going to weigh on consumer spending. So yeah, I don't have any confidence that the unemployment rate will just stay where it is. Looking at layoffs, I mean, you're going to be waiting too long because that's usually the last thing to happen. What do you think they're going to do at Jackson Hole in terms of rhetoric and messaging? Where are you placing your bets? I think that they're going to basically do a little bit of a victory lap and say that the inflation issue has been resolved. And I think that, that the balance of risks have changed, and that'll set them up to cut in September. That's code for it. Yeah. We're going to try to get moving. Part of the big bullish case for risk assets, if you go back to the highs in July, I was saying this too, was the certainty that we were on a path for a soft landing and that the Fed was going to ease, but it was going to be able to do it deliberately for the right reasons because inflation was coming down, and slower easing cycles historically are more bullish for stocks than rapid ones when the Fed is kind of rushing to rescue the economy. Do you think they have room to sort of take it slow if they start in September? I don't think that they should take it slow. No. It's not about what – I mean, like I get the signaling. Like I've seen people say, well, if they go only 25, that's bullish, and if they go 50, it's bearish. But it's really about the economic data. I mean, they're very, very restrictive. In my mind – by their own admission. So in my mind, that actually lowers the threshold for them to do a big upfront move. Because even after 50 basis points, you'd still be actually quite tight. There's a political consideration. Donald Trump gave a press conference yesterday. And one of the things that we've been hearing from the Republicans is any kind of cutting activity between now and the election is basically a political gift to the Democrats. We know that Powell doesn't want to play that game, of course. But do you think that might temper the possibility of larger cuts or quicker cuts or do you think they can look through it and just survive whatever the criticism is in the wake of their move?
It's a great question.
I'm very good at this.
To borrow from Austin Goolsbee, I hope not. I think not. But I don't think it's going to matter one way or the other. I mean, you're sort of damned if you do, damned if you don't. So if they don't go and they do what they should do up front, then they'll have to do even more after the election, and that could look even worse.
Yeah, I mean, if it happens in September, they will have been on hold for 14 months, which is really long. It's not as if it would come out of the blue.
If they wanted to bail out the incumbent, they would have already eased.
Yeah, I mean, the idea that this election is going to hinge on 50 basis points is kind of wild anyway. I mean, the market didn't seem to focus much or react much to Trump's comments, which is kind of a reiteration of his stance that the president should have some kind of a say in Fed policy, monetary policy. Is there a genuine Fed independence question in play?
If Trump
were elected,
we'll let you know in November.
I don't think so. I mean, I think that this is him being him. I mean, I think that, the president does have a say in monetary policy. I mean, the Fed currently is Lisa Cook, Philip Jefferson, Kugler. I mean, these are all Biden appointees, right? So the president does have a say. It's based on the personnel that you put in there. Yeah.